Hello and welcome to the Tuesday trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Nigerians brace for the expiration of labor unions' pause on the latest strike action. And IMF and Kenya reach initial agreement to access $1.1 billion. And gold slips as markets eye outcome of Fed meeting tomorrow. Hello, welcome to the program. I'm Ladi Williams. Let's kick off with the markets now. Let's get a check on the oil market. We're still seeing a lot of volatility in that market. This afternoon, 0.25%, $81. So Brent is trying to hold up to that $80 mark today. We've seen it drop below that level earlier, but let's see if that holds going forward. WTI, that's $77.49 a barrel, down 0.30%. Prices climbed about 3% to 1 week high on Monday, buoyed by expectations of rising fuel demand this summer, despite dollars climbing and the expectations the U.S. Federal Reserve will leave interest rates higher for longer. So everyone's still watching the U.S. Fed at this time. To the metals market, we're seeing gold there, big drop, 0.17%, $2,323. But we'll see silver, that's $29.29 per ounce. Palladium holding on at $896. Well, at the end of the day, it's still the U.S. Fed. Everyone's watching what the U.S. Fed is going to do next at the meeting. If it's going to be another pause or maybe a cut. We'll definitely be watching out for that at this point. All right, let's look at all the stories now. The three tiers of government have received a total sum of 1.14 trillion naira from the Federation Accounts Allocation Committee as revenue distribution for the month of May. According to a statement released by FAC, the amount is lower when compared to the 1.2 trillion naira total allocation shared in April. A brief breakdown of the revenue distribution shows that federal government received 365.81 billion naira. State governments got a higher sum of 388.42 billion naira. While local government councils received about 282 billion naira, while 106.5 billion naira was shared as 13% of mineral derivation revenue to relevant states. And as Nigerians count down to the midnight Tuesday, June the 11th, when labor strike relaxation should expire, Nigerians are holding their breath for next step from the government and labor unions. The Chief Executive Officer of Budget, Sharon Onigmide, believes that if states cut some expenses, they should be able to meet labor's demand halfway, maybe 150,000 naira. Take a listen.
But I think the federal government can afford 150,000 if it chooses to apply capital efficiency, if it makes some goals over to apply some overhead controls, if it shrinks the cost of governance, especially at the federal level, and focus on what exactly is right. I think at the state level, we have to build a tier structure. Some might pay 120, some might pay 100, some might pay 80. And so we could build a tier structure at that level. I think the argument that 30,000 is what the state can afford, I think that is too low, irrespective of any state. There's a need to prioritize work. And it's also a time to have bigger questions on productivity. What's the size of your workforce? And is that what exactly you need? And what is the quality of the output from those workforce? So as the state governments are having this conversation on the minimum wage, they should also have a conversation with labor on productivity. So if I don't need 5 people, and I just need 2 people there, then I know that I have 2 well-paid people there. We all know that the whole corruption within the civil service, all of that is linked with corporate structure. I mean, Budget brought out the data out yesterday. The highest paid person in the civil service is around 517,000 naira.
Well, recently, the independent project monitoring company IPMC launched a report on environmental, social, governance impacts as it impacts society at large. And definitely, we're seeing the concentration on financial services industry. Let's find out more now. Joining us for this conversation is Agatha Femihe, a senior ESG consultant, IPMC, and Mr. Robert Adeodiachi, chairman, IPMC. Join me right here in the studio. Great to have you both.
Thank you very much.
Thank you.
So I like this rating, definitely. So we see how companies, how their activities are actually impacting, the society in Nigeria. But talk to me about why you're concentrating on financial services. We're seeing the banks and the insurance companies. I'll start with you, Agatha.
All right, so we've taken a focus on financial institutions because they are the core of the economy. So we're looking at banks and insurance because most times, most likely than not, they are the focus of investors. We are talking about multinational investors and national investors, of course.
Right. And I'd like to have your opinion on this, Mr. Robert, because definitely you must have seen other industries and you just shifted your focus to financial services.
Actually, the focus on the financial services and the insurance companies, it's like we are starting from the top. Because we're looking at sustainability and we're looking at the environment, we're looking at the social, we're looking at the governance. And we see that they dictate the pace. They actually provide the environment that most businesses thrive in. They safeguard assets, they provide capital, and they kind of fund whatever the impact businesses have on the economy, on the environment, what they have on the society, the social, and they kind of determine how best you behave, because they are the ones that more or less say you've done well, because if you do well, they give you more credit, and doing well entails taking care of the environment, taking care of your people, the social aspects, and then governing your business as well. So we have just picked on them because they look at the whole economic space, so to speak.
Right. Now you did rate 5, top banks and 5 top insurance companies. Talk to me about your findings, from these companies and why you gave them the ratings that they got.
Okay. So we've looked at the environmental performance of these companies, we've looked at social impact, and we've looked at corporate governance. And we have noticed that, especially, I'll start from the insurance companies, that there's not a lot of focus on sustainability in the insurance sector, partly because there's not been any incentive to report on their sustainability footprints. And we have also seen that 48% of banks have sustainability reports and have reported on their sustainability footprints. That means that half of the banking sectors and companies that we have assessed, that is 29, do not have sustainability reports and do not report on their footprints. That's not good enough. Like he has explained, the banks are the core of what we do as a nation. They give credit and they receive credit, right? So that's to say that the banks need to do more in terms of reporting on their sustainability, that's their ESG, environment, social, and governance. And then not just report, but also assess and audit their findings as well. When it comes to the insurance sector, we've noticed that most of the insurance companies do not have sustainability reports. The numbers skip me now, but we found that 70-something% actually do not have sustainability reports. That's a far, far cry from what should be. That means the insurance sector is not measuring their performance and is not reporting on it, right? That is to say, this sector that is at the core of the economy is not doing enough when it comes to their sustainability footprint.
Right, and definitely, looking at their impact to the environment at this time, how are these companies faring, when it comes to energy? Because at the end of the day, how much clean energy are these companies using, for their activities? I'll come to you, sir.
Good question. You see, the emissions generated by everybody in the productive sector is tied to the banking system. It's tied to the insurance industry. Because all our operations are funded by cash, by money, and it comes from the banks. So if the banks vicariously fund a petroleum refinery and the refinery is not compliant, then the bank has some form of responsibility. So you see, everybody moves the emissions generated by everybody, every industry, every business, every community, every oil and gas company is tied to funding. So if the banks really are serious, they can actually lead stay at the front and lead the issue on environment, social and governance. Because, I mean, who funds the oil companies that mess up the environment? The banks. So if the banks decide that whoever they want to fund is compliant and decides that whoever they employ is also compliant to the aspect, and also decide that, wherever they put their money into is compliant, then the whole environment will be compliant. We are looking at vendors of banks, beneficiaries of loans, and people who deposit their funds into banks. If the banks insist that, where's your source of money? Where are your accounts? You see, sustainability does not just mean you're looking at risk, you're looking at governance, you're looking at all the areas where all of us play in. And the banks say, if you want to know if a business is doing well, look into the till. And the till is kept by the banks. So the banks should actually be held vicariously liable for funding a project that is spoiling the environment. I'm not saying that should happen, but at the far end of the discussion, the banks have to be responsible enough to request their customers to behave more responsibly. So that's why we said we should start with them. We should call them out. Because, if they lead and set the goals, every other industry would follow.
Right.
Yeah.
Right. And Agatha, we've been talking about a just transition, for Africa. That's been, on the front burner for a while now. But definitely, they say Africa has to take its time, when it comes to, transition. So how does that impact, your ratings, when it comes to environment?
I actually wanted to add to what you were saying earlier. So based on our findings, we discovered that only 11% of the companies we had assessed have done a comprehensive climate risk assessment. And it ties to energy usage, which is what I was talking about earlier. So that means that a lot of companies in the financial institutions are not paying attention to climate risk. And it's due to the misconception that climate risk is not a Nigerian concern. And that's actually not true. So speaking of just transition, these are the things that we're doing to put in place to make sure that companies are compliant and measuring their footprints, especially as it relates to the environment.
All right, so definitely, I'm sure you're looking at other industries too. I'd like to get your plans, for other industries.
Without letting the cat out of the bag, we have actually started. Our next report would be focused on the oil and gas industry, and then subsequently on the manufacturing companies. We have worked with the regulators to ensure that there's a lot of advocacy out there as to what how people should engage with the environment, and how people should know what regulations, what laws, what codes to comply with. So actually, we're getting the regulators to be more proactive. So there's a lot of advocacy going on in the various sectors. I can't say enough about the oil and gas industry. Their manifestation on the environment is higher than a lot more industry areas.
Right.
So we are coming out with a report on them, and we hope that we'll get the support we need, because a lot of them don't want to release reports that are that manifest their engagement with the environment, with the social, with the community, and also file their accounts and report on their participation, report on their ESG performance, and make it public. So there's that problem there. And if they haven't gotten a request from us, they should look into their system. We have a request in every operator, and we expect that such information should be made public so that we can look at it and then inform the public, and public would be more enlightened. And I must actually draw a correlation between the economy of Nigeria, which is driven mostly by oil, and the activities of the oil and gas companies as it relates engagement with the community and with the public generally. If ESG is as admitted in its practice, the production of oil, you won't believe it, would go up because sustainable practices means asset integrity management, responsible production, which will guarantee sustainability of production, and the society, what do you call them, the community will not attack infrastructure willy-nilly if they benefit from it. So all of that is what we're tying in, because these are the risk of governance, and we want businesses to be sustainable to that extent. We don't want insurance. I hear to insure a company in Niger Delta, the premiums are high because of the risk involved. And that can be mitigated if adequate attention is paid to the dictates of ESG.
Right.
So all we are interested in is, we are what? We are auditors, we are accountants, we are engineers. We just want to make sure that we assure the public that businesses are performing ethically.
Right.
And if they do that, they will be sustainable. So that's just what we want to say.
Okay, so Agatha, I'll get your final thoughts and the kind of support you'd need for this venture.
Okay, so doubling down on what you said earlier about the lack of information from the participating companies, I'd like to also add that one of the challenges we faced when we began this project was finding data that would help us measure their ESG footprints, of course. And we noticed that there was not a lot of feedback from the companies we had reached out to. I can confidently say 4 companies out of the 63 we had reached out to responded back to us, right? And that's a big problem. There's this big quote where they say Africa has a data problem. We don't measure and we don't report. We would like for that not to be the case in these ESG ratings that we're embarking on. So we'd like to reach out to the oil and gas companies, the manufacturing companies to say, when we reach out, please respond to us. Give us the data we need. We're not asking for much. We're asking for sustainability reports, annual reports, basically.
Right, even though it might seem like a lot for them, but it's not that much, I guess. Thank you so much. It was great having you both. Agatha Femi, a senior ESG consultant, IPMC, and Mr. Robert Adeodiachi, chairman, IPMC. Thank you both for your contributions today.
Thank you.
Thank you for having us.
Thank you.
All right, we'll take a break now. When we come back, we'll head straight to the markets. We have some breaking news right there. Do stay with us. This is Business Incorporated. All right, welcome back. Let's head straight to markets now. We have Anita Edet with the details, and definitely we're seeing a big deal.
Laddie,
announced
as a matter of fact, it's I don't know what to call it because it adds to another string of companies exiting Nigeria. That on one side is good news, and on the other side it's not too appealing news. We have the news that just came in just a couple of hours ago, just about 2 hours ago. That's Tolaram Group, which is based in is a Singapore-based company, conglomerate company with interest in consumer goods, fintech, infrastructure, and industrials. It has agreed to take over 58.02% shareholding of Guinness Nigeria from Diageo.
These are companies that have been in Nigeria for so long.
Exactly.
And, you see them, divesting. At this time, it gets quite worrying.
As a matter of fact, it's quite worrisome because at some point you have, these are listed companies, they have shareholdings, and not just shareholdings, their products are quite consumed in Nigeria. Guinness is more or less a beverages company which has many products. We don't want to mention them because of the branding, even though it's a listed company, but everyone knows what Guinness is, especially for the
and I mean, interesting to see how investors actually react to this latest one, but how the market's looking though?
Well, starting off from Monday, which was the second trading week, the start of the second trading week, the market was up by about 0.58%, gaining more than 323 billion. But at intraday, take a look at your numbers there. At intraday, it was down, still oscillating in between positive and negative territory. So now, for our viewers, this is our market at intraday, 0.05%, and that number is still changing. But year to date, the market is still in positive terrain at 3.46%. While month to date is still in the green. We have just about some 7 days into it. Now, let's get straight to the business of the day. That's the shareholding deal between Tolerant Group and Diageo, the parent, the majority shareholder of Guinness Nigeria. And we have our equity market analyst, Bolade Agbola, to talk to us more about this. Thank you for joining us, Bolade.
Good afternoon. Thank you for having me.
So it's quite an interesting time for Nigeria's stock market and the Nigeria's financial market. Now, this announcement, which was made just a couple of hours ago, how is the consumer goods sector responding to this, particularly the shares of Guinness Nigeria, which has not been doing that pretty well?
The reaction has been quite positive. We've seen that Guinness has gained about 8% intraday. So I think the market is receiving that information well, since it's not like Guinness will be delisted or anything, but instead it's another investor that is taking over the majority shares of Guinness. So I think the market has been reacting positively to it, and we've seen some gains on Guinness intraday today.
Okay, so now let's move a little bit away from Guinness and the consumer goods sector and into the banking counter, which is still in the news again. Overnight, we heard the CBN saying that, well, this is responding to rumors that the shares of Wema Bank, Unity Bank, as well as Fidelity, which are listed on the NGX, would have their licenses revoked. But the CBN has come out to counter that report. So how are these banking stocks performing at intraday?
Looking at it intraday, I think they're still positive. Even when the rumors came out yesterday, we saw that Fidelity gained about 6.5% even yesterday. However, for Wema and Unity, the market is still negative, and for Wema, there was no reaction. For Unity, there was a negative reaction, but we don't think it's because of the rumors that are going around the market concerning their licenses being revoked. I just think that generally for the banking stocks, we've seen positive sentiment. Since the beginning of this week, that's since yesterday, the sentiment has been quite positive for these banking stocks. But I think generally banking stocks still remain, the positives still continue today. Intraday. So I don't think that the news or rumors has had any significant negative impact on majority of these banking tickers.
Okay, so now I know we're not talking much about the fixed income market, but let's talk a bit about it. Are investors moving from the fixed income market into the equities market? What is the investor's sentiment at intraday for the overall market performance?
So for the overall intraday performance, we see that market is positive as it has gained marginally, 4% basis up, and tickers that have been driving positive sentiment are some banking stocks. We've seen gains in GTCO, Guinness, Nestle, Presco. So it's not just for one sector. You see that we see it across the sector. So we think that positive sentiments are beginning to return into the equities market, and which is unsurprising given that most of these stocks have cheap valuation and have been trading at a cheap valuation for some period now. So I think investors are trying to take position of this opportunity of these cheap valuations. And also for the banking tickers, we've seen that since there's been some clarity in their capital raising, and so investors are trying to consolidate their investments in these tickers, and ahead of the capital raising that we've seen in the nearest future.
Okay, so thank you so much, Bolade, for that analysis. And of course, we know that the stock market will be closed tomorrow in observance of Democracy Day, and then we'll resume on Thursday. But we'll keep our eyes out on the markets closing for Tuesday's trading session. Thank you so much, sir.
Thank you.
So that was Bolade Agbola, equity market analyst with Chapel Hill Denham for the market's intraday performance. Now, from Africa, we move to the Middle East, where we see Dubai is leading the GCC stocks, sustaining that gain that we saw on Monday. And for intraday, for the Abu Dhabi, 0.11%, and for the Dubai, 0.89%, nearing the 1% gain at intraday. And then, of course, the market is poised for a positive close for Tuesday's trading session. And for the other side of the market, we see the Saudi Tadawul 0.08% in the red at intraday, while the Qatari Stock Exchange at intraday 0.16% in the green. So that's it for that market. And from there, we move straight over to the United States, the world's biggest economy, where we see stock futures slipping as investors are gearing up for the start of the U.S. Federal Reserve's policy meeting. We see the Dow Jones Industrial Average, the S&P 500, and the NASDAQ all in the red, 0.35%, 0.26%, and 0.3%. Now, this is coming as in the investors, like I mentioned, they're preparing for that two-day Fed policy meeting, which begins today. And then the meeting will conclude tomorrow with interest rate policy decision and subsequent press conference where the Federal Reserve Chairman, Jerome Powell, will be making some statement. But before that decision, investors will analyze a small business data, which is due out today. And then on Wednesday, they will also monitor the consumer price index reading for May, which is expected on Wednesday morning. But on the corporate side, traders will monitor results from Oracle, which is one of the big tech companies, and then also Rubik, which is also expected to release its corporate news for the close of Tuesday's trading session. Overnight, the three averages where they ended Monday in the green territory. So, Ladi, that's it for the markets. Right. For Asia, most of them are on holiday, so that's why we couldn't display anything about Asian markets.
I don't know why I have this gut feeling that the U.S. Fed might actually surprise markets tomorrow, but who knows? Fingers crossed.
Exactly. Well, I'm willing for a surprise. You know, some surprises they could make you be on the positive side
end, or
exactly.
Yeah. So let's see what happens. Thank you so much.
Life is full of surprises.
Exactly. Thank you so much, Anita, for the details there. Major markets that we track. All right, let's take it on to London now. We have Simon Pusey join us from our London studio. Great to have you, Simon. So we're seeing data out of the UK. Real wages have risen at the fastest pace since 2021. How's this data been, digested over there in the UK?
Yeah, well, the reason that real wages have risen, as you said there, is that the number of unemployed people in the UK has also risen by 138,000 in the 3 months to April. That's amid growing signs of a weaker jobs market. In the last set of labour market figures before the general election, the Office for National Statistics have said that employment and job vacancies were down and joblessness had increased. The ONS said the jobless rate rose from 4.3% to 4.4%, the fourth increase in a row and the highest level since September 2021. This does, as you said earlier, mean that real wages are rising fast at the moment. So it's not all bad news. And the one big problem in this country is that a number of people, despite working, are struggling with payments, with bills. So any growth in wages is a good thing. But this does mean that unemployment is going up in this country, and that's usually seen as a bad thing. The recent weakening in demand for staff has been attributed to a lack of roles and firms delaying hiring decisions. The ONS have said that the number of job vacancies has also continued to fall, with the number of unfulfilled posts dropping by 12,000 to 904,000 in the 3 months to May. So we've got unemployment going up slightly, but then wages are increasing. So it's good news and bad news, really.
Right, and definitely we'll see how that's going to shape the BOE's rate decision. But we also see the number of UK mortgages in arrears, that's risen to a 7-year high. What's driving that?
Yeah, well, Laddie, in the last quarter of 2023, according to official data that underscores the strain, really, of elevated borrowing costs on households, the proportion of mortgage balances in arrears climbed, as you said, to 1.23%, up from 1.12% in the preceding quarter. It's the highest level since the end of 2016, and the increase reverses a long-standing trend of decreasing overdue payments driven by significant hikes in mortgage rates over the past 3 years. Despite the recent rise, though, the arrears rate does remain significantly lower than the 3.64% peak during the global financial crisis in the first quarter of 2009. The Bank of England will be incredibly cautious about cutting rates at a period when spending power is high for consumers and potentially triggering a fresh inflationary bout. And obviously, inflation's been a big problem in this country over the last few months, really since Liz Truss's pretty disastrous mini budget. As such, today's data will continue to put a dampener really on a rate cut cut in June or August, with November looking like the likeliest date to see that first fall in interest rates.
I guess Liz Truss will definitely not be forgotten soon this time. Well, how are the markets reacting to all this data?
Yeah, the market's all down after those employment figures today. The all-share is down 0.73%, the FTSE 100 down 0.77%, and the FTSE 250 down 0.3%. As always, when the markets are down, the currency is usually doing better. So the pound in the green today, up on the dollar by 0.13%, stronger than the euro again, which is obviously still reeling from political turmoil in France at the moment. And that snap election up nearly a third on 1%, and higher too than the Japanese yen, up 0.23%. Laddie.
All right, thank you so much, Simon, for the update. Thank you. And to Europe now, how to move away from fossil fuels and switch to renewable energies. It's one of the biggest questions of our time. In Germany, car manufacturer Volkswagen says they're ready to take another step. As Holters with DW joins us now. Great to have you, Lars. So what exactly is VW planning?
Thanks for having me, Ladi. Well, this is certainly interesting. Volkswagen wants to build a power center, a giant storage unit for green energy. Imagine a giant plant full of old car batteries that are constantly being charged with all the wind and solar power that is created nearby, and then provides that energy when necessary, when, for example, demand for electricity is high, while sun and wind aren't producing enough. The capacity of this storage unit is said to be 700 megawatt hours, and it's expected to grow to 1,000 or 1 gigawatt hour. And while this is already huge, Volkswagen is apparently planning to open more of these power centers, with the first one to be operating as soon as next year in Germany's wind-intense northern region. Now, for full disclosure, Volkswagen has already operated a smaller power center, but that was seen mostly as a trial balloon. So this large-scale operation can absolutely now be seen as a game changer.
Manufacturer getting into this business?
Well, first and foremost, there is a direct connection to the storage units, of course, needed for this power center. Volkswagen says they will use old car batteries to store all that energy. There will be batteries out of old electric cars that might no longer be strong enough to power that car, but they can still serve as energy storage. The concept has been tried before. BMW and Audi are also using old electric car batteries for power storage, but not as part of the broader grid, but simply for their own use. So it's on a much smaller scale there. Now, for this first power center, Volkswagen has said that they will actually need to use new batteries simply because the return of old ones is just not yet high enough. However, as more electric vehicles take to the streets, more old batteries will eventually come back, and they can be used there instead of being recycled. Also, as Volkswagen and other car manufacturers understand that they have to promote e-mobility more over their out-of-fashion combustion engines, they know that we also need a more stable power grid, all on green energy, and energy storage was one of the missing links here.
All right, what are investors in Europe looking at in today's markets?
Well, we had some market reaction to this weekend's EU elections yesterday, with German shares down a bit, French shares down a bit more. After all, we're looking at a snap election there after a shockingly strong showing by the extreme right. In general, EU bourses were a bit off yesterday. Today, they're looking slightly more upbeat, but of course, it's early in the day. Looking at economic data, we're getting some inflation numbers out of the Netherlands, expected to be up 2.7%. It's important because it's one more indicator the ECB could use in determining their future interest rate policy. Remember, they lowered interest rates last week for the first time in a while, so anything central bank related is for sure on investors' minds.
All right, thank you so much, Lance Halter, for the update from Europe. Thank you. Well, to another conversation now. We see recent data on internet usage in Nigeria shows that Nigerians spent about 500 billion naira on buying data in the first quarter in 2024, and that's excluding companies, telecom companies that are not listed on the stock exchange. So this is just data from Airtel and MTN. So and we see data consumption, that's about 753,000 terabytes. That's what Nigerians consumed in that quarter. Let's talk to Oluwole Abegunde, now Research Director at Insights. Great to have you on the show.
Yeah, thank you, Ladi. Thank you for having me.
Right, so we know there's a cost of living crisis right now, but it seems Nigerians are putting out a big chunk of their income to purchase data.
Yes, I think it's part of the post-COVID effect. I mean, COVID taught us a few things, that you can be at a location remotely and you can get anything done. You can marry online, you can go to church online, go to school online, shop online. And I think that has kind of grown over the years, even till now. So there's that consumer adaptability to what mobile data can do. And that's why we're seeing that growth in the spend in mobile data. And we also need to not forget that this spend is not just on the consumer side. Enterprises too are involved. Businesses are involved in this. Any vertical that has field agents that go out for marketing, for sales on the field also spend on mobile data. So the banking industry, the insurance industry, manufacturing industry, FMCG specifically, also, spend a significant amount of money on mobile data. And even apart from COVID, you have the rising unemployment in Nigeria. And of course, even guys who are employed are looking for multiple streams of income. So you see a lot of marketing and sales on social media, WhatsApp, IG. There's Salah coming up in a few days, and you can see ram sharing, meat sharing, tomato sharing. So there's a lot of activity going on mobile data that consumers and enterprises are doing in the country.
Right, and definitely this is also just data from the listed companies at this time. So that it might be actually more than 500 billion at this time. But let's talk about 4G and 5G and 2G. How would you describe the growth of 4G and 5G networks so far?
I believe 4G has grown significantly compared to 5G. Although 5G is just recent, it's just nascent. The first 5G was deployed by MTN in 2022. 4G has been around for like 8-9 years now. So 4G, the good thing for 4G is that the supply side and the demand side have met in the middle. Where supply side in terms of availability of the service, demand side in terms of affordability, they could afford it. The device ecosystem merges. So that actually helped to accelerate the growth of 4G. But 5G is having challenges because that device ecosystem is not matured enough for the average consumer to be able to get on board. More than that, even for the supply side, the cost of this equipment deploying 5G across the country is challenging because of the exchange rate. Most of these devices coming from Europe, from China, from America. So there's that exchange rate problem that the telecom providers have in being able to bring equipment to the country and deploy. Beyond that, are the demand side ready for the services? I don't think so. In our opinion, in Insights, we believe that the business case for 5G is more on the enterprise side for industries, IoT, and things like that, not for consumers. Because again, we have seen that there's hardly anything you can do on your 5G right now in the country that you can't do on your 4G device, your video gaming, your online streaming, Netflix, YouTube, and all sorts. So that's right. What has kind of impeded 5G growth in the country for now.
And it seems like Nigerians are streaming everything, at this point. But talk to me, what is your outlook for data penetration going forward?
I expect it to grow. I expect data from NCC shows that more people are moving out from the 2G, 3G band into the 4G data because you want to be a part of that value chain, that ecosystem that moves things around. You're more informed. You want entertainment. You want cash transactions, e-commerce, mobile banking. So going forward, I expect to see more people join the 4G train.
I will definitely be looking forward to that. Thank you so much. It was great having you, Oluwole Abegunde, Research Director at Insights. Thank you so much for coming on.
Thanks so much for having me, Ladi. Thank you.
An International Monetary Fund and Kenya have reached a preliminary agreement to help unlock about $1.1 billion of funding for the East African nation. The staff-level agreement, which is subject to approval by the IMF's board, will give Kenya access to about $976 million under an extended fund facility management. The lender said in a statement that an additional $120 million may be disbursed under a so-called resilience and sustainability facility. Reducing debt vulnerabilities is a central objective of a program initially agreed in 2021 with the IMF, says Kenya is at high risk of debt distress. Public debt jumped by a fifth in 2023 from the prior year. The so-called pending bills ballooned to about $5.4 million. All right, so next conversation now for the commodities market. We see avocado prices that has risen about 100% year on year so far, and it's like every other thing. Prices are just higher this time. Let's bring in Halima Dediro. I know Halima did pop in earlier, but now it's your time. Halima, great to have you.
Good afternoon, Ladi. Thanks for having me.
Right. So I don't know anything that the prices, stayed stable, at this point. I can't find that one commodity. But talk to me about avocado prices. What's driving that? I know we produce a lot of avocado.
Okay, so avocado is predominantly grown in the southern and central parts of Nigeria, and the supply has increased in the past decades, and that's why Nigeria ventured into the export space in the late 20th century. But unfortunately, we've not seen an improvement in the supply compared to the demand. And so we are having a demand-supply gap, which is one of the reasons why we see a surge in the price of avocado, not only nationally, but globally. But the growth in the demand for avocado globally is moderated compared to what we have in Nigeria. And another reason for that is because of the increased consumption for industrial purpose and household purpose. It is being used in the therapeutical sector, pharmaceutical sector, and even cosmetic sector for shampoo, soaps, especially the skin and the seed itself. And so we are seeing this increasing over time. This is pushing up the price seriously. And what we can really do to curb this is to increase investment in technology. Let's look at Asia, for instance, India to be specific. India recently revamped their soil health card scheme. And what does that do? It helps farmers in the country to look at the texture of the soil. It recommends fertilizer, and it also recommends the type of crop that can be grown in the country. So that will increase efficiency in the agricultural space. So Nigeria too can adopt that kind of scheme in order to improve the supply side of avocado. Not only that, right, we also have the issue of funding that is really affecting avocado supply and production at large.
Okay, and definitely we've seen the likes of Kenya, do very well with their avocado exports. What can a country like Nigeria learn from Kenya?
Okay, so for Kenya, they have comparative advantage in terms of weather. Their weather is more favorable to help in the production of avocado. And also, the weather of Nigeria too is favorable, but less favorable when we compare the two economies. Not only that, yield per hectare in Kenya is about 80,000, while yield per hectare in Nigeria for avocado is just around 40,000. So if we look at the cost effect, it will be less costly to produce avocado in Kenya compared to Nigeria. And not only that, Kenya is also into increased storage facility because avocado is a perishable good. So they invest in cold storage, while Nigeria, we are not seeing that improved investment in cold storage. So it is increasing the post-harvest loss for even the little we are able to produce in the country, and it is reducing the quality when it comes to export standard for avocado commodity in the global space. So investments, cold storage, and even climate is one of the things that is really helping Kenya.
Right.
And I think Nigeria can learn from the cold storage investments.
And we definitely keep talking about what the government, has to do at this time and private sector. We just hope they'll listen at some point and make these moves so that we can, improve our exports. Thank you so much, Halima Dediro, analyst at Financial Derivatives Company. Thank you.
You're welcome.
All right, let's get a check on all the markets now. Definitely red is on the screen today with Bitcoin down about 3.7% this afternoon. And we see Ethereum not left out. Big 4% drop. So we're seeing massive pullbacks with the likes of BNB. Deep red. Just Tron right now. I'm looking at Coin 360 at this point. So sell-offs right now in the crypto market. Let's look at the sentiment right now. Still quite greedy, at this point, 60 points. But I'm wondering when fear is going to come into this market. It's been greedy for the past couple of months at this time. Let's look at the top cryptocurrencies we track. We see the likes of Bitcoin at 3.13%, 67,000, staying below that $70,000 mark. And we see BNB giving up some gains there, even though BNB has had quite a run. It was about $200 before, and now it's trading at $613 after hitting a high of about $700. Cardano, 43 cents, 4.02% down. So we're seeing heavy pullbacks right here in the crypto market. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Hello, Larry. Good afternoon.
Right, and definitely we know regulation is still in the front burner now when it comes to cryptocurrency in Africa, and Nigeria. But talk to me about ECOWAS countries. How are they doing when it comes to regulating crypto? Because I know crypto regulation is not easy.
Yes, Larry, crypto regulation is not easy, but I think this is a very, very important time in the bloc. When I mean the bloc, I mean the West African bloc, which is the ECOWAS member states. Because we share a lot of similarities from culture, a whole lot of things. So it would be very nice that we have all of these states abide by certain rules which are unique in terms of the crypto asset market. More or less like the European laws now that applies to about 27 member states right about now. It's called the market in crypto asset. We should imply something like that. Nigeria is the head of the ECOWAS right now, so it will give a very good leadership to all of those states. There are some countries there in the bloc that have outright ban of cryptocurrencies, blockchain, and anything that has to do with the industry, which is very, very, very bad. The world is moving, and ECOWAS need to come up with laws that guides digital asset procurement, trading, people doing portfolio management, and a whole lot of things, because we are going to miss a lot for the European Union. Towards the end of 2024, they are going to be fully implementing it. They are also working currently on stablecoin management right now. Stablecoin trades are stable because stablecoins are paired 1:1 to the dollar. So they want to come up with something that has to do with the euro, so that they don't have their block being affected by that. So we can be able to do that also in ECOWAS member states, which Nigeria is leading, to come up with maybe a stable coin that can go all around the West African state. It will help us a lot at this critical time of the global economy for us to be able to stand out at least.
Right. We have a new Director General of the SEC right here in Nigeria. What's the crypto community expecting from this new leadership?
The optimism for having Dr. Timi Agama is really high, if you ask me, as someone that is has all of the informations and is familiar with the industry, play at some point in the industry, So the expectations are high, and we expect him to be able to relate. He has also called for a meeting earlier where a couple of us spoke. I spoke on behalf of the Stakeholders and Blockchain Association of Nigeria. And it is a very nice way to be able to bring industry players together. All other industry players also spoke, which made a lot of sense. But we're thinking that this should not take too much time, because that of the MiCA, it was 3 years, and the 150-page document has been in place that is already being implemented. So we need to roll out all of these so that we take the best opportunity that this industry have to afford. Because the implication of not doing things fast is that bad players will be playing in the black market, which would encourage crimes and is not good for our economy.
Right. Everyone's expecting regulation for cryptocurrency in Nigeria. Thank you so much, Rume Ofi, financial market analyst. We'll keep tracking to see how it grows in this country. Thank you.
Thank you, Eddie.
All right, so that's the show today, and that's how most of the markets we track are looking. You can visit channelcv.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.